I guess, Farmer Jim, everything depends on yields, and that will remain the story moving forward. If you're trying to get a gauge on where stocks are going to go, Goldman's David Kostin is doing that, says if, real yields move to zero, you could get 4,000 on the NASDAQ. I just don't feel like there's a lot of conviction to say that the bottom was in or there's smooth sailing now, that we overdid it, we're oversold to the downside. That may get you a little bit of a bounce, but I don't find too many believers. Now, maybe we're going to get one in a little while when Adam Parker comes up on the program today, our headline guest, Farmer Jim. I went to you, you were with us almost every day last week, and I started almost every program off with you because of your call that Monday was, in fact, the bottom. Now you've had a week to digest all that. We're putting in a dismal January. Here we come to a new month. There are a lot of things on the table. How do you see it now?
So we're 6% higher than we were last Monday, and I'm perfectly willing to move past the moniker of the Farmer Jim bottom, because I think where we are now is you have to look forward. And when you bring up yields and when we talk about the Fed, I have to be clear about my position here. I don't think that yields or the Fed are the reason that the market's going to go down. I think those are the reasons why volatility is going to increase. But I strongly believe that you need a catalyst in order to make the market go down. Now, that catalyst could be anything. It could be Russia versus Ukraine. It could be... Wait.
What do you mean?
Finish. Wait, Scott,
I don't get it. No. I'll come back to you. No. I'll come back to you. No, I'll come back to you for a second because, frankly, when you say there's no catalyst, you're telling me that a new Fed regime, a more hostile Fed, isn't a catalyst enough, that it has to be some exogenous event somewhere or a war in Europe now to wake you up?
Scott, yeah. That is what I'm saying. That's exactly what I'm saying. And let me be clear about this. The bull market is intact. Anybody who's calling for a bear market, I think, is absolutely wrong. And you look at the last time that Russia annexed the Crimea, that year, they did it in February of 2014. The S&P was up 13% that year and 12% on average the next 4 years. The point being is that's not what moves the markets. Profit cycles are what moves the markets. And this profit cycle is still intact. All the Fed is doing is increasing volatility. By itself, it's not going to knock the profit cycle down. And as far as, it not being a catalyst or being a catalyst, we've discussed it for the week. It's time to move on. All right, we've got people out there saying 7 hikes this year, 50 basis points in March. I happen to think all of that is ridiculous. And I'm telling you, you need to now look forward at what the next issue is that can knock the market down. It's not just yields in the Fed. You need something else.